Hello, everybody, and welcome back to another podcast with the crew at Farmers Trading Company here. Looking at an exciting week in the grains here. It seems like we may be in a little bit of an uptrend here and starting the week here. Currently, the May corn's trading around the 440 mark. The December new crop corn is hanging around 470. Looking at the soybeans, the May soybeans are around that 1190 mark, and the November new crop soybeans are around that 1181 mark. We've had a few good days trading here in the last 3 or 4 days. Other than today, I guess we've kind of started to pull back a little bit. It seems like they're trying to work back higher, Vince. We broke above that 20 period moving average. It seems like there's been some more signals of a bull market here. It looks like we're on the new crop beans. We're getting towards that January low range. I guess what should a guy be doing here as far as we've had a lot of buzz, I guess, in the office about old crop corn sales and old crop bean sales. Should a guy be opening up the bins if he needs cash flow needs here? Should a guy be dumping DP if they still got harvested bushels on DP? What should a guy be doing, I guess, in these two markets? Is this the change of trend, or is this just a breath of fresh air before funds start pushing it lower again?
The first indication would be that it's probably a breath of fresh air. Do I think we may have a pretty good bottom in? I think it's a good possibility, Connor, but still really don't think you go any place till late April, mid-May when you get into some weather situations. If our fog things set in here like they could and you get to early to mid-April and it starts raining and we don't plant, that's a different story. But I think if I'm a producer out there, especially with stuff on DP, I think you got to look at dumping it in here and quit paying storage and interest because that's where most guys are going to be at. I do think you get somewhat of a pullback. Maybe it's 15, 20 cents in corn. Maybe it's 20 to 40 in beans. You probably want to re-own it just to see if you can do some more into summer, whether that be with options or futures, depending on your preference. But let's just take corn to start with. Most of those contracts come off 28 to 34 cents off of that low, and that's about where you're going to rally most of the time. If you get those front three contracts at least 37.5 cents off those lows, maybe you got a change of trend. But right now you're at some prime selling areas, so you don't have a lot of risk if you would close those three contracts above 37.5. Then maybe you try to re-own part of that. Beans, one of the key numbers we watch is 68 cents off of a low or off of a high. The July contract on Tuesday did go 68.5 cents off of that low. The next areas to watch would be 80 or 83, which gets you right near those January lows. So I think we have to look at these things and just see where they're at. But again, if you don't need cash flow, it's one thing. But if you do, I think in these areas to a little bit higher in the beans, you got to be dumping at least DP stuff and even other stuff in the bin.
Some of that bigger fundamental news, I guess, we've been hearing was CONAB or some of those private estimates out of Brazil lowering some of that or that carry out. And then we've also heard talks about the U.S. drought. You know, it is really dry looking out in the fields here. I was out in the field yesterday cleaning up some trees, and it's plenty dry out there. Like you say, do we wait till early April for that, or is there any other fundamental news, I guess, that a guy should keep his eye on besides just kind of waiting for the planting scare here?
I think we've looked at the CONAB stuff and we really haven't gotten any big reactions anytime anybody reduces it. There is still talk of hot and dry, especially in Argentina this week, and supposed to rain in Argentina, Brazil next week. The question is, does it actually rain or doesn't it? If it doesn't, then we got some more to go. If it does, we get a pullback in here. I don't know what it'll be. I'm not a weather forecaster. We'll have to see where it's at. But otherwise, I think you've got to, again, be cautious in here. But on right now, I think on pullbacks, you just have to see what we do and think you want to have some ownership of grains at that point. Are we going to get a big rally this summer? I think, as you noted, does drought expand or does it go? That'll be the key.
I think we'll take a quick peek at the wheat market here. It's been kind of an interesting trade this week, I would say. We had a couple of canceled sales to China, but yet it seemed to be going strong with the exception of today. Currently, that Kansas City May wheat is around that 585 mark, and the Minneapolis wheat is around 662. What's been the driving factor in that market that you've seen, Vince?
I think it's psychology and technicals right now. There really isn't a lot of fundamentals. I think you're going to go any place. Russia's had pretty good weather most of the winter right now. They're dry. but not hurting anything yet. They need rain in the next 3 to 4 weeks, just like the Southern Plains does in this country to make it work. We'll have to see if that comes or not. But I think it's more technical. We did get that Kansas City wheat into that between that July or January low and January high time frame on Gann's numbers, and then backed off again. But I think we've got to see where we go. There's reactions here, just like there is on the beans and corn. I don't think it's a runaway short term. Is it a building block and building on a base? I think it is.
One thing you spoke about there, Vince, was the Gann timing and that we kind of creeped back up into that range. Can you explain that a little further for our listeners, what the Gann timing is?
So basically, what you would watch year in and year out, you can do this on any commodity or any stock. You watch it between the 2nd and the 7th of January and the 15th and the 21st. One of those time frames usually puts in a low, one puts in a high. If you ever get a daily close outside of those ranges, you usually spend the next 3 to 4 months in that time frame. On most of those commodities, somewhere between the 27th of January and the 3rd of February, you broke out to the bottom side. Now, are there exceptions to that and you can come back in and go the other way? Yes, right now I don't think you have news to do that, but if we would look at that, and that's probably the biggest reason that I don't think that we get any big runs until you get to late April, early May to get at least 3 months into that on that downside or sideways pattern in here. Um, it's something that we watch every year, and it's usually fairly accurate on what it does, Connor.
I think we'll roll on to livestock then here. It looks like it's been a pretty green day in the cattle markets here. Currently, the feeder cattle are up 75 on that March contract at around that 250 mark, and the August feeders are up about a $1.20 at that 270 mark. Looking at the live cattle, they're also up about a $1.40 in that April contract. It seems like they're chasing that gap that we've talked about in previous weeks. What should a guy expect in this cattle market? Is this a place where a guy should be doing some hedging? It seems like the uptrend has definitely flattened out into more of a sideways trade here in the last couple of weeks. Is this kind of that top that we were talking about too last week, or is this just kind of a little breath of fresh air before another push up?
In my own mind, I think it's more sideways like the grains are in here. We got I think 189.75 on Wednesday morning on that April live cattle, and that gap gets filled at 190.27. You got to believe somebody's going to try to buy this thing and fill it. Whether they're successful at it or not, it's another question. But if they are and you close above it, you probably get more buying. I think when I looked at numbers this morning, um, guessing after last week's commitment of traders report, funds are long about 56,000 contracts of live cattle, which is probably maybe towards the middle or bottom end of where they usually are. We got really extreme when we only went to 12,000 long. And feeder cattle are about 12,000 long, which is near the top of their frame in here as far as what they usually buy. And we have to keep in mind a much lower volume in that feeder cattle and fats. But I think you just watch it over the next day or two, Connor. If we can break out, be a little patient. If we can't, putting some protection in place probably isn't a bad idea, whether that be futures options, LRP, depending on what worked best into your situation and where your break evens are at.
And have you heard anything cash sale wise recently?
There really hasn't been a lot this week that I've seen yet, Connor. Some of the trades are expecting 185 to 186 in the south, 292 to 295 in the north. The south might be steady, just call it a buck higher in the same way in that dress trade in the north. Whether it happens, we'll find out with the way the futures have been going in here and cut back on kills from the packer. You got to think it's a good possibility, but much like the futures market, one has to think that rate of ascent to the cash is probably going to slow down.
Mm-hmm. So looking at the hog market here, it's been kind of interesting to watch. It's been kind of chopping higher and lower every day this week. One day up, the next day down. Is there any news that a guy should be listening for that's gonna kind of help that market to pick a direction, or is it just another one of those sideways markets like we've talked about today with the cattle and the grains?
I see sideways in here. Let's keep in mind that on Thursday we will get our weekly weights report that on the carcass side will tell us on beef and pork where we were compared to last week and last year. I think that can make a difference. I think when you look at those summer months of hogs, you're looking at anticipated lower numbers. We did notice one of the plants, I think for Tyson was closing sometime this summer, maybe even the next month or so. And I don't think it's really going to affect slaughter on hogs right now. When you get into next October, when we pick up a little bit on those rates, then we may find some squeezes, but short term, I don't think it's in a big problem where we go. But this market needs to hold $83 level in that April, and right around 99.70 to $100.20 in that June to continue sideways. Otherwise, if they get below and close below that, maybe they got another $3 to $5 to go on the downside.
One other thing too, to kind of backtrack here that I know we had talked about this morning, but forgot to mention with those grain markets, Vince, was that ethanol report you were telling me about. Can you remind me again what those numbers were?
Well, when the weekly production came in down about 10 million gallons from the previous week at 301 million gallons. We're still within the range of what we need to be to meet USDA's expectations for usage going into September 1. Thing I thought was decent on the other side of that was stocks were down 9 million gallons, which isn't huge. You're somewhere around 1.85 billion is what stocks are, so not like it's huge. But when production was down and that's down, and take on the other side of that, gasoline demand was flat. You just kind of wondering, is it working? Did see an article just before we're doing this talked about the unprofitability of the ethanol industry, which is hard for me to believe where corn prices are at and where the energy prices are at, that it's not fairly decent in there, but I have to do a little more digging on that. But if it is not profitable, that's probably why we're getting cut back a little bit, especially in the eastern states.
Is there any other news, I guess, that stood out this week or things in the commodity world that you'd like to share before we wrap this one up, Vince?
Not right now that I can think of, Connor. I think we covered a lot of. We need to watch the weather in the U.S. and South America. That'll be the biggest drivers. I think we're getting far enough along, especially in Brazilian weather. You're not going to hurt a lot on the beans, second crop corn. You can still do a lot of damage there if it stays hot and dry. In another 3, 4 weeks into that Argentine crop, you're going to be the same way on the beans. You're really not going to do a lot more damage.
I think that's going to do it for this week's podcast then. If we could be of any further assistance to you, feel free to reach out to the office. Our number is 605-996-6500, or check out our website, farmerstradingco.com, for more information. Thank you.